Time now for the markets with Leighton. And Leighton, you say we have some new snapshots of the beef and catfish industry.
That's right, Artis, and those are obviously part of what's ahead in this segment. Looking at our headlines, more cattle in U.S. feedlots. U.S. catfish prices remain above 2010 levels, and Egypt imposes a cotton import ban. We begin in the beef sector, where the October 21st on-feed report from the government showed more cattle in our nation's feedlots. Extension Ag economist John Michael Riley provided some analysis of the new numbers on Thursday morning. John Michael, we had a little surprise in this on-feed report.
A surprise, but not out of the realm of reality. Cattle on feed, just over 11.3 million head. That's 4.9% above where we were at a year ago, and 1 percentage point higher than the analyst expectation. They were looking for that number to be 3.9% above 2010. Marketings were right on par with expectations. The bump actually comes from placements. Placements were on par with 2010, but analysts were looking for that number to be 3.5% below a year ago. Placements just under 2.5 million head reported in the on-feed report. So, you know, not out of the realm of reality, especially given the weather environment that we're in the southern plains. We saw that if you look at placements by weight group, those cattle placed on feed under 600 pounds actually leading the pack in terms of the higher placements number, up 34%. All other weight groups were actually below a year ago, and collectively they were down about 9%. So again, given the current market environment and the weather environment that we're under, it's not the higher than expected placements and the higher than expected cattle on feed number, you know, is understandable.
So an increased interest in placing calves into feedlots is what you're saying.
Exactly. Lighter weight cattle are going in, even though we got really high corn prices, largely driven by the fact that we're running out of grass and we need to get these cattle on feed. So
what does all this portend for the market as we head towards the end of the year?
Well, it definitely is going to push the number of cattle coming off feed, you know, in the early spring, early to mid-spring, going to push that number a little higher than what we probably would have expected. But as we continue to move further into 2012, the latter half, it's definitely going to continue to put a pinch on the number of cattle coming off feed. So that's going to drive that number lower. But in the near term, it's probably going to be a bit of a tad push of up in supply.
So for most producers, you would say this is a good situation, bad situation? How would you paint this?
Well, again, in the near term, it's probably not the best situation, but it doesn't underscore the fact that we are in a supply crunch, and we continue to see that with each and every passing day.
The major monthly report on farm-raised catfish was released October 20th. It reflects activity from the month before. The average pond bank price being paid to U.S. producers in September was $1.28 per pound. That is 45 cents per pound higher than 1 year ago the same month. Farm sales, meanwhile, total just a hair over 30 million pounds round weight. That is a decrease of 23% from September 2010. Processor sales were almost 13.5 million pounds, down 34% from this time 1 year ago. Good exports continue to be a hallmark of the hog sector. Analyst Sue Martin says that China has been importing U.S. pork very aggressively. She notes that on top of that, our regular domestic customers of pork have been very good buyers as well.
I think the hog market still has a chance to push a little bit further here, and I would say to the pork producer, because of the uncertain climate that we seem to be in these days, maybe go ahead and get yourself some puts underneath you. I wouldn't do the futures. I'd do put strategies in the market, and I guess I would say I think the hog producer's in good times.
Well, we are in the season of pumpkins now. You saw them on Southern Gardening a moment ago, and that's the topic for trivia this week. Which state produces the most pumpkins in this country? Is it California, Ohio, Illinois, or Pennsylvania? You'll find out as we continue. Cotton futures traded higher Thursday as global markets surged and the dollar plunged. Despite some crop struggles in the United States, world production is still forecast to be well in excess of projected world demand. Analyst Virgil Robinson advises producers they should be mindful of market history in November.
In the last 5 years, cotton futures have had a tendency to bottom in the month of November and then work irregularly higher into February, March. I think we'll follow that pattern again this year. So again, if you're in position financially to defer sales until the turn of the calendar or sometime in 2012, that's what I would suggest.
Private analysts with R.J. O'Brien and Associates this week issued their corn forecast ahead of the November 9th crop report. They project the U.S. corn harvest will be about 1.5% smaller than the government's last numbers. More significantly, O'Brien and Associates say average nationwide corn yields are heading for an 8-year low following an unusually wet spring and a hot summer in many parts of the United States. Well, returning now to our trivia quiz before this week's feature story. Let's see how your choice panned out. And the answer this week is C. Illinois produces the most pumpkins in the United States.